If you're an individual and you believe in Bitcoin, you buy the Bitcoin, you cold storage the Bitcoin, and you let all the companies power up the network. If the companies didn't show up and the network was all individuals, Bitcoin would be trading $5,000 a coin.
No.
And here's the problem. It wouldn't just trade at $5,000 a coin, but the corporations, if they were to choose a different network to power up, if all the companies went to Bitcoin Cash or Litecoin or Ethereum or something else, Bitcoin would max out at 5,000 a coin and it would dwindle down to nothing.
Hey guys, welcome to Everyday Finance. In this video, Michael Saylor discusses his thoughts on Bitcoin and the cryptocurrency industry as a whole, including his audacious ideas, long-term plans, and his vision for the future. After a powerful 14% increase in just 1 week, Bitcoin is once again in the spotlight, and it has risen to a level that is very near to $124,000, since reaching a low of approximately $108,600 on Friday of last week. It has accelerated toward new highs. It's propelling the total value of the global cryptocurrency market past an astonishing $4.21 trillion. As the price of Bitcoin continues to rise, investors are keeping a careful eye on the possibility that it will surpass $125,500 and possibly $130,000 in the next days.
Well, when we got involved, Bitcoin was trading $9,000 a coin. And today, Bitcoin's $115,000 a coin. And it got that way because our company bought 3%. And BlackRock enabled institutions to buy like 4%. And that means that 93% of the gain, and that's 93% of nearly $2 trillion. So $1.8 trillion went to the individuals that owned the Bitcoin before the corporations got involved. So the individual's not been crowded out. The individual just, if you posit that individuals, were the ones that owned the Bitcoin in the year 2020, then those individuals made $1.8 trillion since the corporations got involved. So the corporations aren't crowding out the individuals. The corporations are making the individuals that believed in Bitcoin insanely wealthy. And now the individuals can decide what do they want to do with that economic power, right? And they'll do whatever. As a practical matter, it seems to me that for our company, if we were to ever get to 5% of the network's going to be at least $1 million a coin. If we were to go beyond it, it's going to 10 million a coin. So when we get to 7% of the network, if we do, and Bitcoin is $10 million a coin, and if BlackRock keeps up with us, that means 85% of the network, right? And you're going to be talking about $200 trillion. So you're going to have $170 trillion that will flow to the individuals. So they're not exactly getting crowded out, right? If anything, what you've got is the corporations are all engines turning the flywheel of the Bitcoin economy. Every single company, every Bitcoin Treasury company that capitalizes on Bitcoin is like attaching a motor to the network. And every time that company buys $50 million worth of Bitcoin, they spin that drive shaft one turn. That's 1 day's natural supply, right? And so the more companies that come on, whether it's BlackRock or whether it's Strategy or whether it's MetaPlanet or whether it's 21 or whether it's BSTR, or whether it's similar, whoever it might be, each one of them is firing up a motor. All of the motors are powering up the network. If you're an individual and you believe in Bitcoin, you buy the Bitcoin, you cold storage the Bitcoin, and you let all the companies power up the network. If the companies didn't show up and the network was all individuals, Bitcoin would be trading $5,000 a coin.
No.
And here's the problem. It wouldn't just trade at $5,000 a coin, but the corporations, if they were to choose a different network to power up, if all the companies went to Bitcoin Cash or Litecoin or Ethereum or something else, Bitcoin would max out at 5,000 a coin and it would dwindle down to nothing because the companies would latch on to the next network, and then they would go to every government in China and Russia and Europe and South America and Africa and the US, and all the laws would be modified to benefit the other network and eventually squeeze the Bitcoin network out. So this is a protocol, and you could even say there's a protocol war, and it's a war to determine the future of money. And the war for the future of money is going to be fought and won with money. So in this particular case, it's the people that have the money are the institutional investors, and the people that can organize the money are the corporations. And if you want to win the monetary war, you need the institutions that control all the capital, and you need the corporations to get involved because you need the support of the government. The government can, with a stroke of a pen, right, block 99% of all the capital from flowing into a network, or they can enable it. And so I think the corporations are very important actors in this, right? They're the ones that are going to hire the lobbyists. They're the ones who are going to do the marketing. They're the ones that are going to defend the network and the individual, right, from having their Bitcoin seized, from having their Bitcoin shut down, or from having a 95% tax on the Bitcoin, right? The reason that'll happen is because the corporations are a line of defense. When I think about Bitcoin, I think the miners are the first line of technical defense. They're defending the network with energy and power. And the Bitcoin Treasury companies are the first line of economic defense. They're defending the network with capital, right? And even the Bitcoin exchanges, right, are the first line of defense. Technically, they're the ones that are going to implement the iPhone apps, the Android apps, right, the websites. And you really want very healthy exchanges, healthy treasuries, healthy miners. You want them to get big. You want them to be well capitalized. You want them everywhere in the world, right? The Bitcoin Treasury company in Shanghai will lobby for the interest of Bitcoin with the Chinese government, right? You have to speak Chinese. You're going to have to be in Beijing if you're going to fight for Bitcoin. And it won't be the individual. It'll be the corporation, and the better capitalized, the more effective they'll be. So I don't think there's any conflict of interest. It's not a zero-sum game. If the world is going to embrace Bitcoin fully, that means corporations, banks, exchanges, operating companies, cities, states, federal governments, you want them all to embrace Bitcoin.
Surprisingly, the most recent increase in Bitcoin occurred with the government shutdown in the United States, still going on. The ascent of Bitcoin has been spurred by uncertainty rather than a lowering of sentiment, since investors have been looking to cryptocurrency while traditional markets have stalled. The premium spread between Coinbase and other exchanges has extended to about $92, indicating that demand in the United States is robust. On-chain data shows that taker by volume has increased by $1.6 billion. Analysts feel that Bitcoin may be entering phase 3 of price discovery, which allows for the possibility of new all-time highs to define the next quarter. This is due to the fact that ETF inflows have been consistent. The Federal Reserve has been dovish, and buyers are flocking in.
Bitcoin is the monetary base of the crypto economy. It is the monetary crypto network. It is digital gold. if you go back 3,000 years, go back and read the Persian expedition by Xenophon. It's about 600 BC-ish. And Xenophon's writing about a bunch of Athenians and Spartans that are mercenaries, and they go into Asia Minor, and then they charge all the way through Babylon to Persia, and they're fighting for, Cyrus against his brother, and Cyrus gets killed, and they have to make their way back to Greece. They have to cross 800 miles of hostile territory, and they fight their way back through 100 tribes. All the tribes speak a different language. They all have a different culture. They all want to kill each other. The Athenians don't trust the Spartans. The Spartans don't trust the Athenians. No one trusts the Persians, right? It's nonstop bloodshed and war, and this is before the Lydian coins. This is before we have coinage. Now, here's the thing that's interesting about the story. The one thing they agree on is they all want to kill each other for gold. They all want gold. Now, why do they want gold? Somehow, 600 BC, everybody agreed that gold was valuable and gold was money, even though they could not agree on their gods, their cultures. They couldn't agree on anything else. But what's fascinating is the book takes it for granted that gold is money. Gold has been valued by thousands and thousands of different cultures, all killing each other, speaking different languages, worshiping different gods, but they're all fighting over gold. And so gold emerged as the primary monetary metal, not silver, not bronze, gold. For 300 years, if you look at the 17th century, the 18th century, the 19th century, even into most of the 20th century, the world revolved around gold-backed credit. Okay, we issued bonds backed by gold. The British bonds, sovereign debt in Britain in 1770 was a gold-backed bond. In the Rothschilds' times, they had gold-backed bonds, right? The French bonds were gold-backed. The German bonds, the Austrian bonds, the Spanish bonds, gold-backed. All of the credit instruments were, to a certain degree, backed by gold, and they would go off the gold standard and back on the gold standard. But this idea of gold-backed credit goes from the 1700s to the 1800s to the 1900s, all the way through 1971. And so we have hundreds and hundreds of years of gold-backed credit instruments. Then we have to wait, and Satoshi invents Bitcoin, and we fight over what is it, and no one can decide. And now, in the year 2025, we have consensus that Bitcoin is digital gold. So on the CNBC, talking heads agree on it. Everyone in the crypto economy agrees Bitcoin is the monetary foundation. It's digital gold. What are the other cryptos? Maybe they're digital silver, maybe they're digital copper, maybe they're digital palladium or digital platinum or digital silicon, but the history of Western civilization isn't based on copper bonds, right? And there was an experiment with silver, but silver bonds didn't really fly. Primarily, we settled upon one metallic monetary network, and now we're settling on one crypto monetary network. So what is a Bitcoin treasury company? Well, there are two profound paradigm shifts. One, Bitcoin, digital capital, right? Digital gold. Never existed before. You could argue that it's only been 9 months since the entire world agreed that Bitcoin was digital gold, okay? That means you can now issue digital gold-backed credit or digital credit. If Bitcoin is digital gold, it's digital capital. And that means that any credit instrument backed by Bitcoin becomes digital credit. What we're talking about, is, if you look at it myopically, you're just thinking, well, how are these companies helping Bitcoin? If you look at it more grandly, the real point is, how are these companies transforming the equity market and the credit market? If I create a company that buys Bitcoin and I accumulate $1 billion of Bitcoin, I have $1 billion of digital capital. What can I do with it? I can issue digital credit. Now, I want you to think about this for a bit. If I had $1 billion of gold, I'm a gold bank, a goldsmith. I have $1 billion of gold. I issue $100 million of gold-backed credit, gold notes. And then they thought, well, why not 500 million? And then they thought, why not $1 billion of gold notes? And you know where the story goes next. They're like, well, why not $2 billion of gold notes? Why not $10 billion? Pretty soon you had $5 of gold-backed credit for $1 of gold, okay? And the entire modern banking system grew out of that issuance of credit, and the credit started from gold. And what was the strongest credit? 1-for-1 backed, right? 1-for-1 backed would be the strongest credit. Okay, so that means $1 billion of Bitcoin could, in theory, be used to issue $1 billion of Bitcoin-backed credit that would be 1-for-1 backed.
Right.
Okay, now, what's that displacing? It's displacing mortgage credit, credit based upon retail houses, residential houses, commercial credit, that's credit based on commercial real estate, a building that's half empty, right? Or it's displacing corporate credit, credit based upon the cash flows of a company. Or it's displacing, fiat credit, credit that's based on the promise of a government to print more credit, right? That is the status quo. And how big is that? Hundreds of trillions of dollars of those 20th century credit instruments.
Ethereum, on the other hand, has demonstrated its strength by producing a weekly gain of 17% to trade above $4,500, which has raised hopes for a breakout into the $5,000 range. For the time being, however, mood continues to be cautious, as the data from futures reveals a neutral posture, and investors are unwilling to fully commit. Competing blockchains like a Solana, BNB chain, and Tron are attracting users with lower costs and faster transactions. WHILST Ethereum's activity has dropped by 10% over the course of the past month. However, a supply shock might be triggered by institutional accumulation, demand for exchange-traded funds, ETFs, and corporate adoption, which could finally push Ether through the $5,000 threshold.